In today's video, we are going to take a look at the core satellite investment strategy. We are taking a look at what it is, how to implement it, and how to define both your core and your satellites in these strategies. Hello and welcome. My name is Peter B. and I welcome you here at My First Million, where we are achieving our financial goals together. I have been following the financial markets for over 20 years now, and I have seen many people using different strategies, both successfully and not so successfully, in winning financially with their investments. So over time, you will see what it can work, what it doesn't work. And you will see some investment decisions are riskier than others. However, if you are following along a core satellite strategy, you are ensuring that you stick to the core and make sure that your successes are coming according to your plans. So what exactly is a core satellite strategy? Let me switch over to this graphic here. So core, as seen here in this graphic, is a big Earth. So Earth here representing a very huge chunk, very big chunk of your core investment. Then around the Earth you see several satellites orbiting the Earth. But you see, they're much smaller than the core. So the core is much bigger than the small satellites around here. So what is the core then? The core is the main investment strategy that you're following along to achieve your financial goals. So how can this core look like? What could be possibilities for a core investment strategy? So maybe your goal is to have a certain amount at your retirement age. And you know, for instance, with the total stock market, it's generating maybe a 7 to 9% rate of return every year. So maybe you want to have a well-diversified portfolio in the stock market and therefore use a total stock market ETF as your core to achieve your goal to have a specific amount at your retirement age. Another possibility for core, which is very common that you will hear, is like an 80-20 portfolio. That 80% of your money is going into a total stock market portfolio and 20% of your money is going into bonds. So this is another possibility for your core. Some people have another approach. Some people just like to build up a portfolio of dividend stocks, especially if they're close to retirement. They want to live off of those dividends that they receive from those stocks. So maybe the core will then be a group of dividend stocks or an ETF on dividends, and the satellite will be other investments outside of the dividend stocks. Then another example of a very common core is that someone is starting to invest into real estate and build up a real estate portfolio, which will then be their core. But maybe again, they still want to have other exposures to other areas as well. So it will be on you to define the core for your investment portfolio. But it also will be on you to define the satellites. So let's head over to the examples. What are potential satellites? And here are potential reasons why you want to consider satellites around your core, outside of your core investment strategy. I think the most common reason why people want to have other investments on the side is for the hope of potential higher returns. We all have heard the success stories that someone put a small amount of money into an investment and let it lie down there, and after a while, maybe a short period of time, but more commonly after a long period of time, these small investments get a very big return. This could be like if you have been investing in Amazon at early stages, or if you have been investing in AMD several years back. So this is probably the main reason why people want to build up satellites. They want to have better opportunities and potentially better outcome than just the regular market performance. Then second, it also could be that you want to reduce risks with your core. For instance, if your core is well diversified ETF on the global stock market, then maybe you want to consider additional investment assets outside of stocks as well. Maybe you want to have a small portion in gold just as a anchoring factor to reduce a little bit of the risk. Or you want to also consider bonds or real estates. And with this broader diversification, usually you can reduce risks as well, even if it's with a smaller portion of your investment portfolio. Then additional reason could be you could be filling the gaps of what your core strategy is not covering. I just mentioned before that one possibility is that your core is a global stock market ETF, but a stock market ETF is not covering other investment alternatives like bonds, like real estate, like gold. Or it could be that your core is an ETF on the S&P 500, so you're mainly focusing on investing into the US stock market. So a satellite therefore could be that you will also do some investments into the international markets. Then another common reason for a satellite is maybe you want to have more exposure to a specific sector. You certainly have experienced the AI hype that is currently happening, that everyone has very big hopes on the futures of artificial intelligence, and therefore also the companies that are investing in these areas and producing products. However, on the contrast, the stock prices of those companies might be already overvalued. But if you believe in the long-term future of AI and you want to have higher exposure because you believe there's potential there, you could, for instance, take a small portion of your investment portfolio and into an AI sector ETF. So that's another reason. Then in general, it could just be for emotional reasons. You want to be supporting either a company, an industry, or a country, etc. For instance, if you love a product of a company, then maybe you just want to have a exposure to that company just out of your love towards that product. And of course, in the end, the stock market also can be used for gambling. So sometimes people are just YOLOing in the money into one specific investment. If they're lucky, then they will win a lot. But if they're not lucky, they lose everything. However, if you have this tendency that you start to gamble on the stock market, then you can use a core satellite strategy to avoid the downside of your gambles that you're taking. So finally, let's take a look how to implement a core satellite strategy. For this, let me scroll down to this overview. Here are the implementation steps of a core satellite strategy. Basically, we have 5 implementation steps. First, you really want to define your long-term investment goals. So once you have defined your long-term investment goals, you will build your core strategy around this long-term goal that you're having, which is just the second step already. So the core strategy is there to achieve your long-term goal, and you need to make sure that you allocate enough resources of the funding that you're having into the core strategy so that you are ensuring your achievement of the long-term goal. So this is automatically already leading us to the third point. You want to define the portfolio allocation. How much of the money that you're having, this usually is in a percentage, like in an allocation percentage, but also could be a specific amount for each month, how much you need to allocate towards your core strategy. As this is the core of your investment strategy, the majority of your money should go toward that strategy. At least I would say 50%, but usually it would be better to have 70, 80 or even 90% going towards the core strategy. And the rest of the amount you can put into specific satellite investments that are coming up. If you are able to define any of them. If you're not able to define any satellites that you want to allocate some portion, some smaller portion of your portfolio into, then of course you can put everything into the core. But again, for your satellites, you want to identify maybe either the maximum percentage of your money that you want to invest into a satellite, or maybe the maximum amount that you are willing to invest into a satellite. And the last step will be over time revisit how is your portfolio distribution and take rebalancing into consideration if needed. That if your satellites are getting too big, maybe you want to focus more on your cores. If your core is bigger than you usually would have wanted to allocate toward your core, maybe you can have a little bit of your spare money, put a little bit more money towards your satellite. So what is your take on the core satellite investment strategy? Do you have any experiences with it? Or what are your thoughts? Please share with me in the comments below. Thanks a lot for joining me today. I look forward to seeing you in the next video, and especially I look forward to seeing you winning financially.